Hello, this is Ian Henry, Auto Analysis. Welcome to the December 2015 edition of the SMMT's European Car and Light Commercial Vehicle Production Outlook. We'll start with a quick look at the production volumes for Europe. For 2015, we're looking at 19.3 million in 2015, 19.4 in 2016, but climbing to 21 million by 2018 and beyond. Germany will remain the powerhouse of European production, albeit with annual volumes now less than 6 million due to the decline expected of Volkswagen and rising production, for example, by Audi and Mercedes in Hungary, Mercedes also in Finland, and all the German premium brands outside of Germany in China and the USA. Spanish production is likely to reach over 2.5 million from this year onwards, although we think it's unlikely that the country will meet the government's aim of 3 million vehicles a year. UK car and light commercial vehicle production remains on target to exceed 2 million by 2018. The UK produces more cars than France, although France produces rather more vans than the UK, and this is a pattern we think will continue. We expect to see further production growth in Turkey, Hungary, the Czech Republic, Slovakia and the UK. And in France, in fact, with a revival at Citroën and rising van production at Renault, we expect France's total production to climb towards the 2010 volumes, but not until 2020. This chart shows European production, excluding Russia, by company, and the detailed figures behind this are all available in the report, which is available on the SMMT's website for you to download now. And here we have the same figures organised by country. The detail behind this chart is available in the report, which is available for you to download from the SMMT. Here we see the figures for Germany and the other major European markets, which clearly highlights the primacy of German production. Although we have a largely positive outlook going forward, it is important to consider some of the issues which could have a more negative impact on European car production. There's the political dimension with the UK's EU referendum, although the timing for this is yet to be confirmed. But how would future UK auto investment be hit by a Brexit? And what will be the impact on the economy of the Middle East and refugee crisis? And will the Schengen Agreement actually survive? We might like to consider what might be the impact of border controls on the industry's logistics. In terms of economics, we currently have a very low oil price, and this undoubtedly benefits consumers. But one has to say, is there also wider damage to the economy, and what is the impact on government tax revenues? And then there's the question of interest rates. Will they rise in 2016, and what will be the impact of such a rise on consumer indebtedness? And finally, the impact of the VW diesel scandal. The impact of this in the long term is yet to be fully assessed, but I think we will see a permanent move away from diesel in Europe. The question is over what time, and the other issue is who will benefit from Volkswagen's troubles. What might be the impact of those negative factors on European car production volumes? Well, a combination of all those could conceivably lead to a 7.5% fall in car production if consumer confidence was hit and the economy took a turn for the worse. If that were to happen and any recovery was then delayed, we could be in a situation where by 2020 we might not have even recovered to the depth of the 2012 recession. And if that were the case, we'd have serious doubts as to whether Europe's automotive sector could retain its current structure. The other important issue to consider is the move of production eastwards, which is certainly having an impact on production volumes in traditional Western Europe. Renault has moved most of its production of the Clio to Turkey, PSA has moved much of its 208 to Slovakia, with all of the new C3 to follow. Mercedes and Audi are increasing production in Hungary, and Mercedes will use Valmet in Finland for the new GLC SUV. Fiat will make the Punto replacement in Poland, and the Tipo, the replacement for the Bravo, in Turkey as well. Toyota is adding production in Turkey, as is Hyundai. Remaining production appears to have peaked for now, with the Ford B-Max production falling and Dacia Sandero production having switched to Morocco. Ford, though, will likely add a B-segment SUV at the end of the decade. In terms of the UK and its 2 million a year target, we still believe that the potential exists for this to be achieved. With the allocation of a global supply for the Honda Civic, strong performance by the Vauxhall Astra and the new models at Toyota expected in the next few years, we certainly think this will be achieved. The UK does need Nissan to maintain its current production volumes. We need to achieve full utilisation of Oxford and the new JLR models to continue to be launched. But we think this will happen, and on this basis we remain confident that the 2 million target is achievable and realistic, and of course it also means substantial opportunities for suppliers. And what are the implications of all of this for UK suppliers? Well, certainly rising UK car production and indeed engine production means significant business potential. A recent BIS report has highlighted 4 billion worth of annual sourcing opportunities, of which 2 billion is at the Tier 2s. And success has been seen in terms of the UK content of UK built vehicles rising. It's now at 41% according to the latest government calculations, although there is still some way to go for the UK to reach Germany's 60%. In terms of specific contracts, the Discovery Sport, the Jaguar XE and the F-Pace were worth each around $3.5 billion to UK suppliers over the life of the contracts. The Astra, on a smaller scale, is worth around $1.4 billion. We can expect to see rising engine production at JLR, and the new Duke and Infiniti from Sunderland will also offer major opportunities for suppliers. Aiding all of this, of course, has been the UK government's Automotive Investment Organisation, which has secured something like 200 automotive projects in the first 2 years of operation, creating or securing over 14,000 manufacturing jobs. And there's much more to follow. Thank you for listening. Details of how to access the report downloading from the SMT's website are now shown on the screen. Until next time, a happy Christmas and a happy New Year. Goodbye.